All right, guys. Thank you. To have every one of you guys back here again today. Shout out to our guys over there that are solid dudes that are always watching us. If you guys could do us a quick favor, hit that like, subscribe, and share button. That always helps us out tremendously and kind of keeps everything fun and ready to go. Give me 1 second. Uh, let me come live right now. No idea where my voice went. Tom's voice is somewhere out there in the ether. He will come back here in a second. All righty, then let's move forward here. Okay, so right off the jump, let's go ahead and go right into the stock market here, and it's just powering up. Now remember, we look at the global market at large, URTH, and that basically just kind of lets us know what's actually happening in the world when it comes from like the stock market perspective. And this thing is just going. It is going. It's kind of crazy. I believe I can hear your side, Tom. Yeah, I can hear you, Tom. All right, perfect. All right, at least I can hear the background um, with uh, with Miss Striking talking in the background. It's okay. I don't know if we're live or not. I don't know if you're live. Alrighty, but let's jump right here real quick. So this thing is just having fun pushing up. I'm still waiting for this thing to kind of drop. Like I keep talking about, just volume is just dying off. I mean, like legit. Like look at that. Like it's just dying. Um, but it's moving up. So if the market's moving up, what do? We go up with it. But a lot of it also has to do with the American stock market and what's actually happening, as well as China's stock market is also pumping as well. So that's also feeding into this. They're trying to push up their market cap overall. And if they can, we're watching the yuan starting to really get starting to pick up as well, some strength. So this is going to kind of help a couple things here with them. One, if the yuan goes up, and that means that their capitalization for the money, for their money. Ooh, let me do that right there real quick. Boom. All right, that looks a lot better. You can see here with that, with their dollar or with the yuan going up, which is their dollar. It will also help put their stock market at a higher capitalization because all of their assets are going to go up as well in relationship to our assets. So it should push it up as well. If and additionally to that, a lot of our stocks are really starting to go up, except for one in particular where China just straight up said we are no longer going to buy NVIDIA chips. We are going to create our own and really push that on the world. So it's going to be really interesting to see how that works. Um, I don't know if that's a good thing or a bad thing. Um, it's all going to depend on how it's going to be used, right? Excuse me, let me get that gum out of my mouth. All right, so let's go ahead and move forward here in the charts. So with this said, I'm seeing this here right now. We're basically all-time highs again, pushing up. I already talked about volume decreasing as we're moving forward. And so we're coming up to the end of the month here. I'm going to add this here. So over the last 3 months, we can see here that the volume has been dropping here, as we can see. And we have one more week left. I'm pretty positive we'll probably finish off the week with this high volume here, probably around maybe 3 million, but last month was like 4 or 5. Was around 5 or 4, like 480, 490, and then the previous month we actually had higher volume. But ultimately, you can see we've just been declining on volume as we keep pushing up. And this is the market around the. These are the markets around the world. So basically, everybody, as we keep continuing higher, they're becoming a little bit timid a bit more timid about buying these highs. Everybody's been talking about, as well as I, talking about the melt up. And this is kind of like what we're seeing right now, right? As inflation keeps going higher, and many of the world's economies keep increasing debt, it's going to keep pushing this up, because as the assets, or as the economy goes up, or excuse me, as the debt goes up, that correlate with inflation, and then assets always have to stay above, or typically assets typically stay above what inflation does. Typically, there are times where it doesn't. Hopefully that doesn't happen for a while, but um, sooner or later, reality is going to come knocking. So we'll find out what happens after that. But yeah, ultimately, this thing's moving up. We're gonna be looking to buy things, right? That's just it. All right, so let's check out the S&P 500. S&P 500 is very similar to what we were just looking at right now, right? Seeing it kind of push up. This month, we've actually seen it go up quite a bit, and we can go over this here real quick. I mean, from just the high of last month, it was at 6,500. Now we're at 6,700, right? That is, what is that? Boom, 6,500 would be, boom, 65, 600. So that's probably 2%. I believe, or 1% push in a month, that's a pretty big deal for the stock market. I mean, but the part that I just keep saying is just that we keep seeing volume starting to drift lower and lower. And so this is, for me, we're already watching. This is the volume average right here. You can see this right here, the blue line here that I'm marking. You can see here it's going down. And so if it keeps going down, that means people aren't willing to buy more and more as it keeps getting closer to the highs. So I would expect, and you can see even back here, right? You can just see it just slowly just going down. This is a monthly chart here. So this isn't anything where it's not something that I can sit there and say, oh, it's a 5 minute, right? It's not, or even a 4 hour or a daily, but it's a monthly chart. And that shows its weakness from 2025 into, honestly, 2024 is really where we've been seeing it going all the way back to there. So with that said, I'm expecting us again have a pullback sooner or later. But a key word is it's going up. So if the market goes up, we look to go up. Let's check out the NASDAQ here. Good old NASI. NQ. So the NQ is showing crazy strength. One, because just the tech stocks are pushing up again, and we're watching it really get up and go. And additionally to that, we're also watching assets stay above inflation, as well as staying above the debt as we keep accruing more debt. We're going to go over the debt again. We just crossed the 37.5 or 37 trillion 500 thousand mark. Again, we beat a record of accruing more debt than we ever have before in a month, which is scary. We're speeding up. We're literally speeding up to the debt ceiling where companies are going to sit there and just fight against us. But they're also becoming very much well aware of what we're doing. We talked about the U.S. literally starting to adopt crypto stable coins, right? And I said, and this was probably about 2 years ago, a year and a half ago, especially, I mean, I know, I'm trying to think, last summer, I was definitely hitting hard on this, where I said, I cannot see how once the government understands the power of the stable coins, how they would not export that to the rest of the world, because then that basically means that, and I even said, and this was one of the things I talked about, is it would be smart for America to tie a USDT, USDC for a backing of it. They would actually have to buy treasuries, and lo and behold, that's what we saw. And additionally to that, by them exporting that USDT and USDC, people then are inadvertently buying US debt, right? And so then basically we keep the money printing machines forever going up. Obviously, that's not what's going to happen. There will be some type of deleveraging. But again, this is something that we're now seeing, and it's actually progressing. So with that said, what does that mean? Well, that means that Bitcoin, many of the other assets, and I believe we're not done seeing assets being created. Obviously, real world assets, RWAs, are going to be one of the ones where I'm keeping my eyes out, seeing what's actually coming, what's climbing up the ranks. in additionally to that, seeing what we have today and seeing what's going to stick around and what's not going to stick around. So those are some of the ones I'll probably talk about next week. Some of the ones I think maybe may not be around. Kind of like how like Yahoo, when it first came around, it was everybody, it was the rage. Everybody's like, oh my goodness, it's Yahoo, Yahoo, right? Um, Everybody remembers, well, at least my generations remember, you got mail. But obviously it's not what it is today. So that's why I'm kind of just paying attention, and we want to reallocate our monies so that we make sure we have a correct portfolio. Now, here's the key to be paying attention to, okay? If we do see a pullback, right, with the NASDAQ, I would expect to see a liquidity pull right here at this level. And this is important to point out. This is going to be month. This is all the way down at 22,584. We should see a pretty decent bounce off of this, simply because it's almost like a 3-month. It's a quarterly, or potentially, let me make sure it's quarterly when I say that. Yeah, it's a quarterly area. So I would expect us to see kind of a pullback that correlates there. When we get into October, at the beginning of October, I just don't, I can't keep seeing, I just don't think we're going to keep pushing up. I mean, just look at the volume. It's dying off. And it's just like, are they going to keep pushing it up? We're going to see. We are going to see. But if it does pull back, we're ready. We've got areas here that we know we're going to be able to buy in at it as it sells off. So I like that 582 area. Now, here's the thing. On the daily chart, we keep staying above that 8 and 20. So if we do see a pullback, we want to wait for the pullback to kind of get around that 20 period, which is the orange line right here. And then we have the 8 period. So anytime we see it pull back into these levels, we want to make sure that we're kind of buying and purchasing as it moves up. More importantly, also making sure that our stop is below the 8 or and 20, right? Depending on when you decide you want to get in. But we're starting to see kind of push up. Now, my biggest concern is this, is you see this little area right here. See how it's starting to widen right here? You see that? It's not a good sign. And so for me, if it starts to get just exaggerated, you can see right here how you start to see it kind of progressing, and then we saw the pullback. Again, we're looking at the daily. I want to see it just consistently, just kind of keeping an even between the two, right? But right now we're kind of seeing it kind of disentangle, and most likely we'll probably see a pullback. But right now we're just kind of just want to stay long in our trades here if you're still in that NASDAQ trade. Now let's go ahead and pull up the Russell 2000. Russell 2000 is created, it's now at new all-time highs, as you can see. And most importantly, since the beginning of the year, we've watched this thing since April 25, the 25th of April. You can literally see, or I guess on the 9th, it literally just did a V-shaped push up. And this is, I mean, I wasn't expecting this, but one of the things I think the highlight though, is it's almost up 50%. That is absolutely crazy from the lows. So so it'll be 17. I think it's 50%. I just want to make sure. Let me make sure it is. Come on, brain. 170, 15, 30. Almost like almost 40, like almost like 40%, 40. So that's a big push up. That means that this pushing up is a huge indication of basically saying that small businesses are strong and that investors want to buy into America's small business, or the largest, smallest businesses. And so with that said, this right here was kind of one of the things I did not expect. I mean, we did expect it to push up, especially if we were talking about a recovery within America for small business manufacturing, but we're not seeing that, right? We're not seeing a ton of manufacturing really picking up and getting going. So with that said, you can see my concern for this big push up here of like, is this just in preparation for that? And they're not done with that. They're actually going to come out with it and they're going to look like geniuses just front running this trade. Right. And it could be that, right? It very much could. I keep harping on the fact that Trump needs to make sure that he hits hard, and this is key, right, on job creation, in particular manufacturing jobs. jobs that will help out with the GDP. So it's really important. Keep harping on it, Pedro. Thank you. I appreciate that. Connect me one. You rock the mic. Shout out also to Crypto Mike. How you doing, brother? It is good to have you. We got 10 people watching. Appreciate every one of you guys. You guys could hit that like and that subscribe button. Hit that share button. That also helps us out tremendously. And for me to keep giving you guys this great, at least I think it's great content. And plus, I think I'm really funny too, right? So great, funny, as Tom says, no, what do you call it? Edutainment. Alrighty. So I'm trying to be the entertaining part there, but that's just, I don't think I really am. I think Tom's very much more entertaining than I'm just more of just facts and figures and numbers. Alrighty. So yeah, so we're watching this push up. It just hit all-time high here. All right. So today, this is why I actually saw, I was like, holy crap, it hit an all-time high. What is that? That's crazy talk. Right. So it hit a new all-time high. And in additionally to that, I think what's important to pay attention to is the fact that it's so high and we're seeing volume again kind of slow down here. I just think it's time for a pullback, right? Typically, we look at all-time highs and we see pullbacks that come along with that, right? Here's the high. We saw the pullback come down, put the higher low in, which is what we're seeing. Now, I would expect it if it does continue higher, okay? We're going to probably see it maybe potentially get to the next level, which is going to be that 2,500 into that 2,600. So these are big moves here for that. I mean, we're talking, this is 10-15% move here. So we're going to put this at, here, come on, we'll say 2,500. So that 2,500 here, which is pretty much just a day move. That's why I was looking more or less at that 2,600. And we're going to do that right there. All right. And then we're going to do 2,500 right here. So these are the areas that I'm kind of looking at to see if we're going to see a bit of a pullback here. I think if we start to see a pullback here on the Russell 2000, then I would expect to see the rest of the indices kind of push back as well. But ultimately, this thing is strong as bull, even though we don't have enough volume to keep continuing up. So, hey, whatever. It's moving up. Go long. Just make sure you have your tight stops. Be ready to sell. All right, here we go. Now let's check out the bonds here. The bonds have been acting pretty interesting. Just the fact is that we're seeing them just slowly go lower. They're expecting again. Here's our 1 month bond. Right now, it's all the way down at that 408 area here. One of the other areas that we've talked about is actually coming down to that 39 or that 350 to that 325 area here. We're actually selling below here, so I think we're also going to see the 1 month get below. Again, this is one of the closest ones to the Fed rate, and so this one will probably be hit the hardest as we see as it keeps going lower. That's why we kind of have it down at that the 350, 325 area here. And the reason why I'm picking that is literally just because that is this. And I'm just going to put 350 just make it easier. But it should probably end up more at these lower levels here. And if once we get below this low again, which is kind of, I think we're already there, right? Yeah, looks like we actually went below it right here. Yeah, we did. Went right below it, pulled back, and then again, this is a liquidity area, right? This is exactly the type of thing I talk about, right? Hit the liquidity, pushed back up, and then came back down. The next level is down at these lower levels. So I like it. This should continue. Also, we know that Powell is speaking today. And speaking of this, we can actually transition into this here real quick for the economic numbers here. And we're going to go over that. Give me 1 second. All the major numbers here. So we have the global manufacturing PMI. With this, we actually saw it get above or excuse me, below than what it was. And I believe 50 it below 50 is good and above 50 is bad. I just want to make sure I do have that correct. But basically, it just means that the manufacturers who manufacture everything, yeah, there we go. Below 50 indicates contraction. I flipped it upside down. Sorry for that. Some of them are the opposite. So below 50 indicates contraction. Traders watch these surveys closely to purchase manufacturing, manu, man, excuse me, as purchasing managers usually have early access to data about their company performance, which can be a leading indicator of overall economic performance. A higher than expected reading should be taken as positive, bullish of the USD, while a lower than expected reading should be taken as a negative for the USD. The fact that it is higher, which means that people are starting to buy more from us, just because it's kind of smart because our USD, because the dollar itself is actually so low, it would behoove them to say, hey, it would be smart for us to buy from America because it's cheaper um, to do business with them versus, let's say, China or other companies, or excuse me, not other companies, but other countries. One of the things to also be paying attention to is are as we are going through and creating or there is a need for things to pick up, we want to make sure that there's jobs, real jobs. We want real jobs. And so that's what we're kind of paying attention to. This week, we're going to find out where the real jobs are coming in. Hopefully, it will be correct and no revisions into next week. Fingers crossed, right? Mikester says, that's there's that banner blocking my view again. Striking says edutainment. There we go. Wish I knew what coin he was talking about. Oh no, I'm not talking about a coin, brother. I'm actually just talking about right now just the indices and what's actually happening. As the US dollar keeps going lower, it just makes it smarter for the rest of the world to actually do business with America. America. So we'll see how that goes. But um, again, we again could come back down to that 95 area, 94, 95. I believe the last time we were here was 2012. Yeah. Give me 1 second. 2021. And then it skyrocketed. And then I believe we were also down here. When was this? 2012. Yeah, 2012. We were at, if we, I don't think we'll get down to there. That'd be crazy. That would actually be, that would hurt us as Americans simply because from a economic standpoint, we wouldn't necessarily be able to go abroad more, but also the way we want to buy stuff from other countries, it would just make us having to buy less and then kind of hurt us. So I think where we're sitting at that 97 down to that like 94 area is really kind of that sweet spot to keep it below. We'll see if Trump, let's see if it gets down to that, see if it gets down in that 90s, but I don't think we will. I think this is a pretty solid area here in relationship to what we're looking. So that's that 95, 94 area is really what I'm kind of seeing. And then we can go to the DY, US, USDX. Boom. Yeah, so you can see the volume as it's selling off, you see the volume stepping down. And so again, it's the reverse of what we're talking about with the market pushing up. So people are definitely, the selling off has slowed down on the US dollar. People are picking more up. So that's why if I'm going to really see it, it's just really just that 95 area is just like that perfect area right there. I could see people just saying, all right, cool, that's a good price right here at these levels. Let's move this here real quick. There it is. All right. Honestly, I probably should switch on my lines to this one here. It's probably a better one to look at. But I like the Dixie, just because without the volume and stuff like that, I just think it. I don't know. I feel like it's better with, and I don't have a bias, but I do have a bias towards it. So go figure. All right, next. Let's finish off the bonds here, and then we'll go into the numbers here. Actually, I didn't finish off the numbers. Let me finish off the numbers, and we'll come back into this here in a second. Here we go. Economic. So we saw it a little higher than expected, which is a good thing. Um, Here it is. This is where we're trying to go. It's my Forex factory. I thought I had it. Oh, I closed it accidentally. Okay. Give me 1 second. We'll do the Forex factory. Forexfactory.com. Boom. And Powell. All right. Powell says, thank you. It's been a pleasure to be back here in Rhode Island. Boom. COVID-19. No, you don't do that right now. Here we are. Mini USD. Here we go. We have the Richmond Manufacturing Index. It's not it though. Oh, why isn't it showing me? That's interesting. Normally it gives me a chart here. I thought it just given me. Is it because I logged out? Yeah, that's what it is. We'll bring that up. All right, I'll open that up later. We'll log in. But just basically, we're watching this actually decrease and what we're looking at. So that's why, for me, I want to see what's going to happen there. From as we're watching, it's basically doing this, right? And so as we do that, so the increase here is. I'm not saying it's not a good thing, but I just don't think it's really like where we need it, right? And that's a comparative to where the stock market is up and where it's going. So with that said, let me move that back up here. Boom. Oh, there it is. That's where it was. I'm sorry, I was looking at the traders. I was like, boom, why am I logged out? Boom, news, calendar. I don't understand why they don't have the graphs here. Normally they have the graphs here. That's real interesting. All right, next. Let's go on to the next one because I've got to do this quickly. All right. So, like I keep saying, and we're going to go into the bond. So as our debt keeps going higher, the more and more we need people to buy our bonds and treasuries. That's what keeps the U.S. government moving. Now, as this is going higher, which I've talked about ad nauseum, it makes things harder for us to actually build up our defense, right? We talk about this all the time. U.S. defense is now a lot less than we're paying more money to interest, which is right here, than we are to the U.S. defense here. And if this keeps going, this is going to start eating away at our ability to actually go through and defend the U.S. Or not just U.S. but also defend the U.S. system. 76 Norton Gold on the rocket. Yes, absolutely, man. It is legit. Boom. Yeah, we'll go over that 76 Norton in a second. All right. So also with our trade on hey, but I'm hearing like a scratchy. It literally sounds like that. I don't know if that's you trying to speak or if that is just the system just being buggy. I wish you were here, my friend. All right. Next, we're watching. Let's go ahead and go here to the bonds. Give me 1 second. So U.S. bond one, the month. Oh, there you are. What's up? Oh no, for whatever. It just like it's just like, and then it just comes on and off. Let's and move forward here. So we have the 30, we have the 30-day, or we have the 1 month. We really what we want to pay attention to is that 2-year here. The 2-year here and the 10-year is really the step actually buying our debt to really help us out in regard. And kind of car loan to, depending on how you set up your loan. And then we have the 10-year, which is I forget what the 10-year is. What is the 10-year? What is the 10-year bond to do with what loan? Give me about that. Just want to make sure. Great question, Pedro. The 10-year U.S. Treasury bond is one of the most closely watched financial instruments in the world, not just for its yield, but for what it signals about the broader economic condition. Let's unpack this role. Come on, just give me the answer. Benchmark. It's the reference point for everything from mortgage rates, yep, to corporate that's really where it's at. It's the corporate borrowing that actually happens in mortgage rates. And so economic sentiment gauge, rising yields often signal expectations or inflation of, yeah, okay, cool. So it's basically bonds as well as mortgage back. Also, I believe it's businesses as well. Like businesses also play, like if you're going to take a business loan out, it's typically between a 5 to 10 year loan, and it doesn't, and it fluctuates, right? And so that's where it's really played off of. That's what it was. That's where I knew my brain. I was like, I knew it, but my brain was just like holding on to it. Wouldn't tell me. My brain wouldn't release the information to me, at least to the prefrontal cortex, so I could use it so quickly. So here we go. So we're watching it right now play on that 2-year where we have this liquidity areas as we've been speaking. We bounced off it over this month. And it's really what's interesting is this is that as we're coming in, we're getting above that 8-period moving average on the 2-year. Now we do not want that. We do not want to see this get above the higher time frames, right? And so we want to make sure that we see the smaller time frames always at a lower yield and the higher time frames at a higher yield, right? So that's what we're looking at. You can see here we're kind of seeing a similar thing. So that is something that we just want to keep paying attention to. This is really illiquid on the CME. So if you're going to look to trade this, I wouldn't, but we're just paying attention to this in general because we want to understand what yields are doing. Is it going down or yields going up? Now, we're looking, if you look at the weekly chart, though, we are coming up on the 10-year yield. We did talk about last week of it selling off, but it pulled a liquidity area, which is right here. So we saw it go down, and now this week we're going up. I believe because of what we're going to be seeing here in the next few months with Powell dropping rates, I'm pretty positive that we're going to see the yield get to that 875 to or 8. Excuse me, where is this? Boom, come on. There we are. That 870, or not 875, 375 area here on the 10-year bond area, 10-year bond yield here, which means that I would expect to see the 10-year bond itself to keep going higher. Now we're bouncing off of the weekly 8-period moving average. We talked about this would most likely hold and see it pull back into that 8-period moving average. And then from there, seeing it continue higher. So that's kind of what we're watching here right now. We're seeing it go here. So I'd expect it to continue up to, like I said, the next level is that 122 to that 121 area. If you want to play the bonds, you can play this on the CME and play that As long as we stay above the 8 period moving average, we want to be long. If we come down and we start to come down, I'm waiting for it to really test that 100 period moving average down here at that 110 area. But if you want to capture this long from here, I would suggest just kind of wait and see. Want to see it get past that 100 or that 200 period moving average, and they can see it continue up into the higher levels. So that's in a nutshell. Let's talk about the 30-year. And I believe ZB is 30 years. Why is my brain not remembering this right now? I want to say ZB con. This. Yeah, 30-year. Just want to make sure. The ZB is the 30-year. We're watching it actually play nicely. It's staying above what our 10-year is what we want to see. But also at the same sense, it means that people are looking to buy some of our bonds. You can see as we keep moving up that people are interested in it. So that's a good thing. We'll find out what happens. But if people stop buying it, which has also been happening, and we've been seeing volume step out, that means we have to find some buyer. And that's why we were talking about crypto stable coins, because crypto stable coins would be acting in a correct way. Now let's go ahead and move here. So we already went over the dollar. Let's go over the crude oil. It's still staying in the edit box that we talked about. There's really no new developments here except for what we're watching here. So like that's where it's at. And we've been staying at the level here of that 62.47 to 62.18 area. And I would expect it to see it kind of come back down to these lower levels here. As you can see, if we see it break this level, I'd expect it to see it come down and tap that 60 area to that 59 area. And then from there, we'll wait and see. But ultimately, that's what's happening. Um, I expect to see us kind of stay here just because we were already putting the supply wick and the demand wick for both ends of the month, and so I just don't see it really just really seeing any big movements up or down. We'll wait until next month to see how it happens. But again, we're near the last month, the full last trading week of the month. So typically that's what we see happen. It's just kind of just chills there and then waits for the next month to either go up or go down to tell you what it's going to do. Most likely it's going to go up in the beginning of the month and see it go down at the end of the month. Now the other part is next Tuesday, we're going to go over quarterly charts, right? Because we're coming into the new quarter for next Tuesday. And so we want to prepare for that. And that will be fun. I think we're going to have a fun October, November, and December. Things are really going to, I think things are picking up in relationship to what the market is doing. All right, gold. Let's check out gold. Crypto Mike, what's up? Also with 76 Norton. All right, so gold hit our target, which was that 3,800. And what's crazy about it is that when it hit it, like it didn't even flinch. Like I was expecting to see some form of flinch, right? Like boom, right? And it pulled back. It didn't even do that. Like not even on the hour. I mean, look at it. It literally just said, "What's my name? Get off of me." I ain't got time for that. That's exactly what happened. Like literally, it just said bloop, came back, found support at that 2,800, and now it's looking like it wants to continue. So we'll see what happens. But I'm expecting gold with that type of movement to get up to that 4,000 pretty quick. Now, again, we're talking about how like China, India, Russia are buying gold. Every major um, corporate entity are looking to buy gold and create their own crypto stable coin for their own business. So you're going to have like a USD AZ for Amazon, USD W, whatever, Walmart, right? USDW for Walmart. And as these happen, right, they're going to need to back these up with something. Obviously, we're going to have to use treasuries, but then I think they're going to be picking up gold as well. We also know the majority of the Federal Reserves are out there buying gold, like just outright, boom, because they're trying to get more gold on the balance, and they're trying to kind of get rid of the U.S. dollar. But as crypto keeps moving and keeps producing and keeps growing, well, we're going to go through and export the U.S. debt in that sense, right? Because if they buy a U.S. dollar or a crypto stable coin, well, it doesn't even matter. If you're going to buy Walmart, you're going to be buying Walmart and U.S. treasuries, right? So it's going to be really interesting to see as this starts to progress. Russia's already made it clear that it doesn't like what America is doing, but the only way that they can really kind of even play is if they create a ruble, crypto, or a ruble um, stable coin, right? Then they can export that. Then they export their own debt, and and all of a sudden now you're seeing people buying crypto. And here's the thing: we know Russians love trading, and Russians love crypto. We see a bunch of hash rates over in Russia. We also see it as well as in China. So it would just be smarter for them to create their own stable coin fully. They already have their own blockchain. They already have everything kind of set up in the same way, but just a fully developed system just helps things out for them as well. I mean, you're not gonna. It's almost like Kodak and Adobe, right? Like Kodak just blew off. They're the ones who actually created the digital camera, right? But it was actually Adobe that ran with it because they saw what was actually happening. If I would say China and Russia and India don't fully get on board here, they're just going to get left in the dust because the blockchain is more efficient and it's easier to transfer money. And this makes sense, right? The fact that now America is 100% for crypto, it still doesn't mean that they need to be off, right? Like it would be smart for them to take advantage of it. Anyhow, so that I'm expecting gold. All that to say is to get up to that 4,000 next, man. I wonder how quickly it's going to do that. I mean, it's just 200 points. I mean, I know that sounds loud. I mean, that's what is that? That's 7%. I think it could climb in 7% in a month. I mean, that would be absolutely crazy. Wait a minute, let me just make sure. Yeah, so it would be 3,800, 200 points. 3% or 10% would be 300. So 200. Let me say it like this. It should be about 5% growth. So it'd be crazy if we saw a 5% growth in 1 month or 2 months. I was talking with a trader friend of mine. He was just literally saying that he sees it just screaming up like this, boom, hitting that 4,000, then pulling back. Um, Now, with this said, let's talk about silver. Silver is also pumping. It hasn't hit all-time highs yet, but it's close. That all-time high is that 49.82 to 48.60. The reason why I'm bringing this up here is because this here still is, even though right, we've talked a 1%, excuse me, not 1%, 10% to gold ratio. So if gold is at, let's say, 3,000, or we say gold is at 2,000, we should see silver between 100 and 200, right? Well, right now it's it's 3,800. We could see this thing get up to 300. If this thing wants to catch up, right, we're talking 150 to $300 an ounce for silver. Again, that's a big deal. With right now, we're only sitting at $40 or $44. And so we could see a pretty big movement, especially with the big increase of need for silver, because just China just simply said they're no longer buying NVIDIA AI chips. and they're going to create their own, which means they're going to need silver because the primary metal that is used to give it that really perfect, just seamless connectivity is really silver. So they're going to start needing and buying silver, which is, again, they're going to be coming out there and buying. Also, China has made it very clear they're now going to just start becoming a gold exporter as well as importer, right? They're going to, and I don't think they're going to get rid of their gold. I think what they're going to do is they're going to collateralize it and make it into a debt instrument so that they can actually sell to the rest of the world and receive income from it. And if people go through and, I mean, that just makes sense to me. Why wouldn't they do that? So kind of expect that type of movement. Also, with that, if they're smart, I would literally adopt crypto. And then one of the biggest hash, and which I think it's China. I think China has the CCP has a huge amount of Bitcoin. They have a huge amount of Bitcoin. So if I was out there, I would literally kind of what Michael Saylor is talking about with making it the ground system. I would actually have that back in the yuan. Have they sit there and say we are backed by gold and backed by the yuan, or backed by gold and backed by Bitcoin. All of a sudden, you have a settlement system around the world. If CCP is looking at it, he needs to be able to see kind of into the future, kind of how what's it called? Adobe saw what Kodak didn't. But honestly, America's already front running them. So even if they want to do it, they're just going to help out America. So I don't know. We'll see what happens there. All right. So long story short, we've got silver at that 44. I'm expecting to see it get to that 49, 48 probably by the end of next month, as gold keeps going up. This is our next, and this is going to be that all-time high. After that, honestly, it's price discovery. I think once we get to that 49, I think we'll start to see gold or not gold, but silver start to make like seismic moves. Because there's no longer any type of hindrance for it. There's no supply there. So it literally just can start climbing, boom, boom, boom. I mean, we're talking, I mean, I know it sounds crazy, but 1 to 2% potentially every 2 weeks, 1 week. I mean, really, if this thing really starts to go, especially with the statements that Xi Jinping has talked about, that is one of those things I'm expecting to see as we start to move, as we start to progress. Now, the other part behind it as well is this, and you can see here. All right, so we went over that. Boom. Copper, same thing, still in the same idiot box. It's just kind of consolidating here. We're watching basically the need for copper to still consolidate, really. There's not a lot of manufacturing happening. China isn't really super buying everything anymore. They've kind of given up the ghost on their economy right now and just trying to mitigate a lot of the shrapnel flying out all over the place. Next, let's go ahead and go into, boom, yeah, we're already seeing that. NVIDIA, let's talk about NVIDIA. Boom, I can't, no worries, brother. Now the next part here, you can see with NVIDIA is playing kind of a cat and mouse game here right now. And so the reason why we look at these top ones, because these like NVIDIA, Microsoft, Google, Amazon, Tesla, Meta, as well as Netflix. These stocks are the ones that are kind of keeping up and keeping the stock market afloat. Now, obviously, we went over the Russell 2000, which is the largest small cap companies in America, and we're seeing it really pick up. Not necessarily manufacturing or a lot of these small business that correlate with it, but I think what's happening is people are front running it because they really do expect to see Trump really start hitting hard on those metrics there. And so I think I think they're front running that. And with that said, I think what we could do is see NVIDIA kind of sell off. We can start seeing a few of these other companies out here start to sell off, which isn't a bad thing, right? Which would cause a pullback in the regular stock market. And as that happens, what we'll see is a cyclical rotation between large cap into mid and small caps, right? And then seeing potentially as things really start to increase, within those, then we can see restabilization of the actual economy and seeing it start to go up again. And I mean the real economy, not just the stock market, right? And so I think that's going to be one. So it's going to be really interesting to see as we move forward. Let's go into the charts here. Nvidia is kind of just doing a little bit of a top off. It hit all-time high yesterday, and then with the news from China, it didn't do too well for that. If it's going to pull back, most likely we're going to see it come down to this level here. Just going to be sitting right here at this level. And it's going to be that 170, 168 area. I think the smart thing to do is let this thing pull back area here and then see re-engage into the trend up. But you can see right here, it's definitely kind of messing with this level here. Also, if we do pull back, and if you're looking for a short-term day trade on Nvidia, whatever you're playing, stocks or options, you can see here that we have the 8-period moving average, and it's been holding that here, as you can see, around that 177.07 area here. So as long as we're staying above that in that day trade, be looking for it to continue up. But again, it hit that all-time high, hit the liquidity pull, and then sold off. And that's what this is right here. Look at that liquidity pull, all those stops. It stopped everyone out. And then look at them drop it on us. What's wrong with them, right? All right, next, let's go into Google. Google, you can see here, similar situation. All-time high here from yesterday. So I'll pull back to the 8-period, but it should most likely keep continuing as we move forward. Amazon pulling back off of certain news that's correlated with a lot of what we're seeing for the tariffs. That pullback here is a nice little area to pick up. Where is it going to go? Well, we're kind of sold off already to the 100. We're about to come down to the 100-period moving average, which is sitting roughly around that 118 area, 118.52 area here. Plus, there's a liquidity area right here on Amazon. So for me, you guys know I love this. This is one of my favorite trades, right? A liquidity area where I can actually go through and pick up where we have institutional buyers in relationship to a moving average. So this area here is always one of those fun areas you could play. Again, that's that 219.05 area where I would look to play with the 118 area, which is that 100-day period moving average. Now, if you're lucky, you could see it, you could pick it up at a discount here at that 214 area as well. Which is sitting at that 200-day period moving average. But ultimately, as it pulls back, we know that Amazon is not going to go away anytime soon. I was actually at the gym and I think I saw like 15, just driving to the gym this morning, saw like 15 Amazon trucks driving around going like, I know they're not doing too well, but dude, like they're still driving. They still have drivers. They're still dropping things off. So it's, don't fade a giant. Even if they're falling, they can always get back up. All right, next, let's check out Apple. Apple, which I thought was really interesting, is really starting to pump. And I don't really fully understand why. I still think like their systems, I mean, Android is still better. The only reason, the primary reason why I keep hearing people say I have Apple and I buy Apple products is because all of my system is with them. Right. But I've heard multiple people straight tell me the phone is not as good as an Android. Right. And I know, man, I might be pissed. I might be making some people really upset over this, but it's just not. So unless they really come out with something super amazing, where it's almost like Obi-Wan Kenobi with RTD2 when he's like hologram and you see it, right? If you come up with that, I'll buy an Apple. But I bet you, Samsung will most likely create something before Apple does. Anyways, so next, but they are pushing up here, and we're watching them kind of push up. I would say if you're going to wait, if you're going to be getting part of Apple, I like it down at 242 area, and most likely we tried to pull back down to that 223 area, but it was just too strong, and it looked like it went up. Well, it did go up, but it also found support on the 8-period moving average, which I thought we were going to come down, tap through, and push up. But it found that 8 on the found the weekly 8 as it pushed up. Now let's go ahead and go into Tesla and Meta. Tesla's pushing up. Obviously, we talked about last week how Elon Musk bought what was it, $1 billion worth of stock. It pushed back up. The other part behind it as well is this, is if it continues here, right, it's going to literally hit all-time highs. And if it does that, again, price discovery, right? That's nothing but price discovery there. So keep paying attention to this. Next, Meta with their glasses and everything that correlates with them. Give me 1 second. Sorry about that, my people. Looks like my friend. All right, cool. All right, give me 1 second here. Um, we're pulling up here right now. We're pulling back to this area for Meta. I expect if we see it pull back, I really like that 708 area here as it pulls back. And if it continues there, then that 200-day period moving average, which is sitting at that 6620, or excuse me, 662 area here. For your 200-day period moving average. Next, let's check out MicroStrategies. MicroStrategies is still kind of pulling back. We're hoping for that 380 or that 337 area, but it's actually starting to find support right now on that A. I don't think it's going to hold. If we see Bitcoin sell off just even a little bit more, this will most likely break this low here, and we're going to see it come down and test that 262 area here. As you can see, it correlates right here between the two. So I'd expect that right here to come down to that 400-day period moving average. It's already broken major support right here, right? You saw it come down, broke, and now it's finding resistance above that 200 period moving average. We saw a pretty good volume come in this week. Even at the end of last week for strategies. So that's why I just think we're going to see continued down. Now let's go into Bitcoin and Sol. Here we go. Oh, shoot. All right. Okay, here we go. Bitcoin, again, we're playing in between the idiot box here. Not idiot box, but we're just kind of consolidating here. I'm expecting this to really, over the week, if we start to have really good economic news, we're watching everything push up, yet this isn't pushing up. So that's why I'm expecting now a continuation down, at least to that 110, that 110.68. 110.618 area here as we start to come down here. If it does, we see it, we'll get ready for a pullback, right? And then something continued down if it does. I just think we're going down because there's just not enough liquidity here that it's just looking for. So with that said, if this does not hold, which is going to be that 110 area, expect a 107 tap. Which is going to be about right here, as you can see, and it's going to be the lows right here. This area right here was already traded through. If this does not hold, the next level is at 104 to 103 area right here. So again, these are just small little plays here that you can take advantage of. If the market comes in, hits it, we want to go long, right? Real quick, and then we want to get out of that trade. Ethereum is pulling back here again. Similar situation with Bitcoin, but it actually has a lower low here with a lower high, which isn't the best thing. I was wrong with this. I thought we were going to continue higher. I was wrong in that same sense. The next level of real support is around that 370 or that 3,700 area to that 38 or 3882 area here, which is what I'm saying, which is the liquidity. So that's about it in a nutshell. I do got to get going, guys. I apologize for a quick thing. I just needed to, I wanted to get into this. Oh, let's go over BNB here real quick. BNB, we did play the liquidity right here. I want to bring this up here because this was a trade that we were talking about. We can see this was a good trade. This thing was a kick butt trade. You can see it right here. So we saw it kind of come in. Right, hit the liquidity area right here. We saw it come down. We're not seeing a ton of supply wicks or demand wicks, right? It's just kind of it's just coming down. Here we go. Right, I could have just done that right there. It would have been easier. But here's the thing right here. Once it climbed above that 8 period moving average, right? We watch it coming in, boom. We go long, our stop goes right here. And then we want a 1-to-1 ratio. So this is going to be this play right here. Boom, which is, wow, right here. Stop goes right here. We want a 1-to-1. So it would have been about right, I believe, about right here. So that's where we would have been looking to stay in. We move our stop up to here, right? And actually, it didn't even put in that local low here, which is interesting. But you could have put it right below that 8 period moving average, which would have been right here. We would have gone long right here because of the volume coming in that we're watching as it pulled up. Stop comes right here, and look, it just continues all day long. I mean, this would have been good. You would have been out 70% right here, and then you would have been looking to see what's going to happen at that 200-day. It literally pushed through the 200, came back, found support, and then continued all the way up to the 400, pulled back, not even 50%, maybe 25%, and then just continued off of this liquidity area right here. So that is a great trade. You should have been in that. Based off of that would have probably been a 400%. I'm trying to see fully what that would have been. Boom. Yeah. Oh, 4,800. That's not right. Let's see this here real quick. That doesn't seem right. Two. Wow, I didn't even realize that. No, am I seeing that correctly? 6x. Yeah, that's what it would have been. So that would have been a 6x. Nice little play right there that we would have been playing. Or we'll say, yeah, 6x. So it's about a 6x right here from the lows here. Obviously, we would have mitigated our stop once we hit that 1-to-1 ratio. And then from there, we would have just let this one run and see how much money we can pull out of it, of that 30% that we would have running. So nice little play if you guys took it. Let's check out Solana here real quick. Now, Solana's been acting real funny in the same sense. You can see here that it hit the high. Here, I thought we were going to come and tap that 170 or that 272 area to that 290. It pulled back here. Now, we can go over this chart here real quick. You can see here's a liquidity area right here on the daily. We're coming up to this. You have that 50-period moving average sitting right here. And so actually we could play this as well. So you actually have two here. You can play this right here. So you have two of them here. I really like the lower one here though. I'm going to play off of this zone. I'm going to play, that's at 205.58. And then the 210 here is another good area here as well. But I just don't think this one might hold just simply because it's already tried to hit it. It's already taken buyers here already. So most likely it will push through this area, kind of come back up and then come down. So I really like this area right here. Either way, I think both are going to be good trades for you guys. So again, this is going to be the same type of play that we were just talking about with BNB. All right, guys. I got to get going, but thank you so much for coming in today. I really appreciate every single one of you guys. If you guys have any questions or concerns, please reach out to me, ask me questions. Love to go over your stuff. And in additionally to that, you can reach us in our actual Telegram, which is the link is below in the comment section. You can just go on and click it if you have any questions, or if you want me to go over any charts, please reach out to me, let me know, and we can go over that stuff as well. Also, what also helps us out, and if you don't mind doing, you don't have to, but it does help us out. I'd love it if you guys could go through and just hit the share button and then click on that link. That helps us out tremendously, especially for replays, and gets it out to other people, new subscribers who like what we're doing. All right, guys, thank you so much for your time. I appreciate every one of you guys. Many blessings, and we will talk to you guys soon, okay? Have a blessed day.